If it
Hello and welcome to today's NinjaTrader ecosystem event with Adam Ryan of Optic Trading. My name is Tiffany and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. At the bottom of the Zoom window, you'll see a chat icon. Clicking on it will open up the chat window so you can ask questions during today's session. Also, please let me know if you can hear and see the presentation by entering a Y into the chat window now. Thank you all for confirming that. Secondly, this webinar is presented by NinjaTrader LLC, which is a technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage using the phone number and email on the screen. Lastly, if you are new to NinjaTrader, please make sure you sign up for your free NinjaTrader demo with real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can get a free demo account by following the link in the chat room. Before I turn the mic over to Adam, it is important to understand that the futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. For more information or for a copy of the full CFTC risk disclosure, please visit the following link. Also, please remember that these training sessions are not a solicitation nor recommendation, but simply educational in nature. Thanks again for joining us today. And without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Adam Ryan of Optic Trading. Take it away, Adam.
Okay, do you see my screen?
I do.
All right, okay, we'll get right in here. All right, good afternoon, everybody. Thanks for taking the time to attend this presentation. Before we get started, I want to say a huge thank you to NinjaTrader for giving me the opportunity to present here. I'm really excited to share this information with you guys, how to spot market manipulation. Okay. So first thing we're going to do is go through a little introduction on myself, who I am, a little bit about my trading style, how I approach the markets, experience, that kind of good stuff. And then we'll jump right into the agenda, what we're going to cover in this presentation, and get started that way. So my name is Adam Ryan. I'm the president and founder of Optic Trading. I'm a professional trader, educator, and mentor with over a decade of full-time trading experience. And the way I approach the markets is from about a 30% technical analysis, price action, and market structure standpoint. So I'm using technical analysis and price action to help me find structural points where I think buyers or sellers are likely to become active. Next thing I'm going to do is order flow, which is about 60% of my methodology. And that's what I'm using for execution. I'm using to find where institutions are buying and selling, as well as manipulation. This is all done through order flow. So it's very, very hard to spot these things if you're looking at traditional charts like candlesticks or line graphs or anything else, because we can't see the bids and the offers. And if you're unfamiliar with what a bid and an offer is, don't worry, we're going to get to that later on in this presentation. Next thing, part of my methodology is news. So it takes up about 10% of the way I trade, and it's not too big, but it does come into play here or there. So I'm not really too concerned with what economic event numbers are, what exactly the news items are, but I want to know when they're coming out, unless they're surprise events, because they will add volatility to the market. So I've been trading. Coming on this January will be my 12th year full-time trading, and I absolutely love trading. So I eat, sleep, and breathe trading. I wake up thinking about trading. I'm trading all day. I go to bed thinking about trading, and sometimes I even dream about trading. I just love this career. It's this intellectual puzzle that we get to solve each and every day. And I like sharing that with other people as well. So I've also been featured on the Chat with Traders podcast. That was episode 12. So this is a podcast where the host interviews professional traders, and it's a really good show because you get to see the ins and outs, the ups and downs, and kind of how traders progressed from starting off just like we all do as retail traders into progressing into professional traders. And I give my whole backstory there. Now, I only have 30 minutes here, so I can't give you the whole version. I'm giving you kind of the condensed version here. But if you're interested on knowing a little bit more about me and my whole story, you can check out Chat with Traders for that episode. I've also written a couple articles for technical analysis of stocks and commodities, both online and in print. And the market I'm trading is crude oil futures, and I'm expressing my trades on the day time frame. So I'm opening and closing trades within the same day, 99% of the time. The other 1%, if something really, if a major change occurs, I may hold. But most of my trade, majority of trade is opening and closing within the same day. So what are we going to cover in this presentation? First thing we're going to touch on is how prices move. Now, it's really important to understand how price is actually going to get from one point to the next. Now, I know when I ask most traders, how does price get from one point to the next? They have a bunch of different guesses, but few people actually understand how it actually moves. Now, institutions, hedge funds, large traders have a firm understanding of how price moves, and they know how it's going to get there. They know what's it going to take to move price there, especially when they're manipulating the price and moving it. They have to really understand that. And you guys should really understand that as well. Now, to do that, I'm going to pull up the DOM, or the depth of market screen, just to show you guys how the order book looks and how it moves around. If you're unfamiliar with that, don't worry. I'm going to make sure that you guys fully understand what the order book is. If you are familiar and you're thinking, oh no, not all these numbers flashing across the screen again, don't worry. I don't actually trade with the depth of market. I use something else to simplify that process, but I'm just showing you because it's really easy to explain with the DOM up. So then we're going to go through some order types that are commonly used as well as an order type that's used with manipulation, and not just tell you, but I want you guys to be able to spot this for yourself. So I'm going to show you how you can see when certain order types are being used based on the orders that are coming into the order book. Then we're going to touch on manipulation, get into the good stuff here. There's several different manipulation practices. So we have spoofing, absorptions, stop runs, quote stuffing, layering, it goes on and on. And you can find all these at the CFTC website. So they actually outline a bunch of different manipulation practices, and they have fines where they're fining countless number of individuals. And we have people like JP Morgan, we have huge institutions and banks that are constantly getting slap on the wrists basically, and then they go out and they do it again. So I think that it's very important that you guys understand these manipulation practices, because they're not going anywhere, right? The way that they're being regulated is that they're kind of stopping some people, but it's not enough of a deterrence to get it out of the market. So this is something that we're going to have to deal with. So it's really important that you guys understand that. So then I'm going to go through some examples on spoofing. And I'm going to just hone in just on spoofing strictly because I only have a 30-minute time limit. So there's not enough time for me to go through every example, but I will cover spoofing. And if you guys really enjoyed and want to see more, I'd be happy to come back and touch on some of the other practices. Now, before we dive right into all this good stuff, I want to spend a moment talking a little bit about trader development. Now, it's really important that you're focusing on the right things as you develop, right? I can show you all the greatest tools and tactics and show you manipulation and all these great things. But if you're focusing on the wrong thing and you're not developing properly, you're never going to be able to really use what I'm teaching. So I really want to make sure that you're developing at the proper pace. Now, in this graphic here, I have kind of three different trees growing up, and they represent the novice trader, the intermediate, and the advanced trader. And when you're a novice trader, sadly, most people, they don't make it out of the novice phase, right? They're coming into this thinking, I'm going to be rich. You know, they're focusing on mostly indicators, systems, their heads in the clouds, and they're outcome oriented. And none of these things are bad in themselves. So focusing on indicators and systems and all that, it's not bad in and of itself. But when you're only focusing on buying the newest, latest indicator or buying the newest system that's going to make your trading good, whereas you're not focused on developing as a trader, right? So nothing wrong with indicators, but an indicator is not going to make you a trader. Like the newest flashing, blinking thing on the screen telling you when to buy or sell, that's not going to make it for you as a trader. You need to understand when to buy and sell yourself. Next thing is with systems, right? And I fell prey to all these things as well that I'm talking to you guys about, is that you want to buy some system, some black box that's going to make the money for you and trade for you. And this is just not the case. You know, if any system actually worked that well, then the vendor wouldn't be selling it, because it's going to degrade the edge. As soon as a whole bunch of people start trading, there's only so much liquidity at each price point. And the more people that start trading this system, that means they're going to start competing for fills. That means they're going to get much and much more slippage, which means the price you enter to where you actually get filled, to the point where it actually degrades the edge. And even if it was a profitable system, it's now a not profitable system. So instead of focusing on all this stuff, let's start focusing on the stuff that you actually need to succeed. Okay, so the things like price action, market structure, your trading psychology, and risk management. And most of this stuff is learned in phase 2, usually when you become an intermediate trader. So in phase 1, when you were all outcome oriented, your head in the sky and you're buying indicators and doing all that stuff, you've probably blown accounts or you've had a couple of losses. And then you start realizing, hey, I think I really need to learn something. And in this phase is when traders usually discover price action, market structure. They learn about trading psychology and risk management. And this is the path you want to go to developing your trading. So instead of getting stuck here in phase 1, if you're a beginner or a newer trader, just stick right to this stuff. Start learning about the stuff that actually matters, right? Like your price action, market structure, learn about your psychology, more about yourself, and then have a good risk management methodology that's going to make sure that you stay in this game long term. Now, after you've done this for a while and you start getting better and better at understanding and identifying price action, all the things I've just listed in phase 2, then you're ready to move on to phase 3, which is the advanced trader. So when you become an advanced trader, you don't have as many aha moments that you've had in phase 1 or phase 2. You're not finding things out all the time. like you were in the beginning where everything's so new. But when you do find things, they're usually game changer, huge things. Like you start to actually realize who's in control of the market, not just the buyers or sellers, but is it institutions? Is it hedge funds? Or is it the day traders? When the institutions back out and the day traders are controlling price, price moves very different. So a lot of traders come into the market and they have one strategy and they want to trade it each and every day, right? But that's not how you really approach markets. When you're a high performing trader, you realize that if institutions are in control, I got to approach the markets this way. When day traders are in control, I got to approach it a different way, because certain setups may work. But if Goldman Sachs comes in and they have thousands of crude oil contracts to sell today, it doesn't matter if you have the best system in the world, the market's going down. So we have to be able to find that and adjust. And in this phase, when you become an advanced trader, is when you're able to do that. You begin to understand that markets are manipulated. How can you see this? You develop advanced execution tactics, and you move away from the outcome oriented to now you're a process oriented trader. So you're no longer worrying about every trade, how much you're going to make. You're no longer thinking, oh, I'm going to make $1,000 today. You're thinking about the process. Okay, follow my strategy. How do I need to execute? What's my risk management? Where are the setups I need to look for? What are my 3 goals for the day that I want to focus on? It's all about the process, right? And that's where you want to get to. So you want to start with your price action, market structure, trading psychology, and risk management, and then start developing, and you're going to move on and on with that. Okay, so with trader development out of the way, let's move on to our first topic, which is how prices move. So what we're looking at here is a DOM, or a depth of market screen. This is showing us all the orders that are resting in the book. And it's also called an order book. So before the dawn of electronic trading, somebody would actually walk around and exchange with a book. So that's why it's called the order book. Now it's everything's electronic. But to get a better understanding of what we're looking at here, I'm going to go through a couple of order types. Some of you may already know what this stuff is, but for some of you who don't, I'm just going to quickly touch on it, and then we're going to move on to the more advanced material later on. So first we have market orders, which are going to guarantee us the fill, but they're not going to guarantee us the price. And then next we have limit orders, which are going to guarantee us the price, but they're not going to guarantee us the fill. So a couple examples, let's say that price is trading at 43.55 and I want to buy, right? Let's say I want to buy with 30 contracts and I hit buy. I might not get filled until 40.57 or 58, right? Because based on how much liquidity is in the order book at that time, based on the participants and the volatility, I may not get my price. And that's what we have to deal with market orders. Now, why would you want to use a market order if you're not going to get your price? Well, a couple of reasons are, if you're using a stop loss and you want to get out of the market at a predetermined loss, you don't want to be messing around with limit orders, because you may have a small loss that now turns into a large loss. Another reason is if the market's taking off, it's breaking out, volatility is increasing, you want to get on board. You don't want to be messing around with a limit order for a few ticks when the market's taken off. You just want to get in, otherwise you're going to be left in the dust, and that's why you'd use a market order. Now with limit orders, the opposite of that is happening. So you're guaranteed the price, but you're not guaranteed a fill. So let's say back with this example in here at 43.55, if I put a buy order to buy here and price is at 65, it moves down to 57 and takes off, I'm not filled because it didn't touch my order. As well as if I have 10 contracts trying to buy here, we come down, only 5 fill and move off, then I'm only left with 5. So that's the limit to a limit order. That's the downside of it, is you might not always get filled, but you're going to make sure that you get the price that you want. Now, back to the depth of market here, what this is telling us is in the middle column here is price. So this is showing all the price, and this is a crude oil depth of market, but it's the same on all the different instruments. And on the left side, we have buyers. On the right side, we have sellers, but they're limit buyers. So just how we show the difference between market and limit orders, all of these are resting limits in the book. So they want to get this price on the bid here. And on the right, we have the ask or the offer. So an easy way to just remember this is if we have buyers below, sellers above. Now, how do we actually move from one price to the next? How do we get from, let's say, 43.55 to 43.59? How do we get all the way up here? Well, the way we do that is we can see that we have 24 sellers. So this is limit sellers in the book. To move above this, 24 buyers have to come in here and take that out, right? We have to move up. And then to get to the next highest price, we got 48 and then 34. So to move through here, a buyer has to be more aggressive taking it out. So there can never be more buyers than sellers, right? Because markets exist for one reason, and that reason is to facilitate trade between buyers and sellers. So a buyer has to match up with every seller, but one side can be more aggressive. So let's say an institution comes in and they want to do something called sweeping the book, which is they literally buy up the 10 years prices in the order book. So they could put a market order in for, let's say, 500 contracts, and it would literally sweep all these orders and take them all out. And that's one way that we would move higher and lower. So I don't have a whole bunch of time to spend on the different ways that we move around in the book, but this is just a really basic outline so you guys can understand for when we touch on this a little bit later. So another order type that I want to get to is called the iceberg order type. So this is an order type that's commonly used with manipulation, not always, but what this order type does is it aims to hide a portion of their order from the order book. So you wouldn't even see it in the depth of market screen at all. So just like this iceberg we see here, if we look at the top, if we were in a boat or if we were on the shore, we would look and we would only see the tip of the iceberg and we say, wow, that's pretty big. But the actual huge part that we can't see is under the water. And that's the same thing with an iceberg order type. They're showing just a little bit of the liquidity, but most of it is under the water. So they have the small size to hide their true intentions up here. And the real order, the bulk of their order, is hidden from market participants. So I'm going to also show you guys a way that you guys can find and see iceberg order types. So you can see, hey, somebody may be manipulating here, or at the very least, a large trader is trying to conceal his size. Now, next thing we want to get to is spoofing. So this is our first manipulation practice we're going to talk about. And to get into this, I first have to outline what we're looking at here. So we have, again, the depth of market screen on the left, but now we have a heat map on the right as well. So they're showing us both the same information, except on the right, it's much, much easier to see what's going on because now we have historical information. So when we look at the DOM right here, numbers are flashing so quickly, and once it's gone, it's gone. But with the heat map, we can clearly see what's happening. We can see in the past, if you've missed a quick flash of orders, you can see it no problem. So what are we looking at here? Just like how we have orders right here where we see price in here, below we have the bids, above we have the offer, or to make it easier, we have buyers below, sellers above. Same thing on this chart. So we have a line graph right here. Below we have buyers, above we have sellers. Now, if it's really dark, that means the quantity is very small. And when it gets really bright, like we can see in here, we have higher quantity. So this allows us to see much, much easier. Now, the practice of spoofing, it's an illegal manipulation practice. And what it is when a market participant, a trader, institution, hedge fund puts size into the order book with, at the time of entry, they intend to cancel it. So they don't want the order to fill, right? So let's say that there's an order right in here at 43.52, right? An institution puts 500 contracts in. Well, just the fact that they put that 500 contracts in, other market participants are going to see that. They're going to want to get in front of that large order. And also there's actually algorithms that are co-located at the exchanges, right, that can actually get in with low latency ahead of you and me. They see those orders, they jump in right away, and they're just trying to get pennies, right? But that starts the initial thrust. Then retail traders, people at home, they see that, oh, they want to get in, look at this huge buyer. So it starts pushing price up. Meanwhile, a lot of these manipulators, what they do is they have iceberg orders. So they show a small size up in here, let's say at 43.57 of 34 contracts, where really they have maybe 340 contracts, but they flash the large size to make it look like they want to buy, and they have their hidden size up here to sell. As soon as that demand pushes up into here, they sell. And then as soon as they're filled, they pull that liquidity out of the market where they wanted to buy, and the market just tumbles down. So this stuff is very hard to see just looking at a DOM, but when we go over to the heat map, it's much, much easier to see. So here we can see that the market's trading lower, 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 lower in here. We have a liquidity area in here. It's pulled very quickly. You can't really see. But then we have two areas right here stacked on top of each other, right? These are two sellers pushing aggressively to try to sell the price. As soon as the market moves up into it, it pulls, right? So if this order really wanted to sell, it would have let the market come into it, but it pulls. And then there's an area right in here. I know it's very hard to see. I was trying to fit as much information on the screen, but it's another flash of a sell order and it's pulled, right? This is happening within milliseconds. It's very quick. So this is pulled away. They're trying to push the price down, right? So they want to buy. So likely there's buy orders in here. Then it comes back into the sell order. It's pulled again. Market starts turning over. Again, they flash their order. Only a tick in between their price. And as soon as the price comes back up into them, they pull the order. So they have no intention of executing here because you see they're pulling here, they're pulling here, they're pulling here again. And then we get an interesting thing right here, which is called the flip. So likely they're buying, they're selling, they're buying in here, buying in here, buying in here. And if they've filled their quantity and they want to push it, they flip. So now they're showing that they want to buy so they can press the price even further through here, right? And if I had more time, I would show you guys the tape as well when you're looking so you can actually see what's being filled, right? Not just that you see the spoof, but you want to see, is there actually quantity trading in these areas? So I'm going to show you guys another example on this as well. It's a little more pronounced. So here we have limit buyers coming in right here. The market moves down into it, they pull, right? Then it pops up again, it starts moving in, they come in 3 prices stacked with just a tick in between. So what is this? This is an algorithm, right? There's no way that a human can come in and hit 3 prices like this and then be able to pull within seconds of it being filled, right? So right now we know this is an algorithm. They're likely trying to sell because we see it come down, they're pulling, see it come down, they're pulling, right? So what we want to do is we want to look at the tape and see if we see a lot of trading into the offer, a lot of sellers trying to sell in this area. And then we watch as we make the turn here, they're chasing it up like they want to buy, but they're just pulling, right? And then here we get the flip again, like we've seen in the last slide. Now they're flipping. So likely they've probably filled all the sell orders they're looking to sell, and then they flip. Now they want to push it down, keep it from going down, and then it rolls off. Like if we had all these buyers so huge trying to buy, and then we just go through it, it's an indication that they're not trying to buy. This is spoofing. Okay, now one way that the spoofers get away with this is they let the order stay in the market, right? And so then it doesn't become a spoof as long as you keep it in. Now, I know a lot of traders, when they look at liquidity, when they look at the order book, they'll say, well, I know it's a real order because the order has stayed in the market for a long time and it actually filled. So here we can see that this order actually got filled. And we can see with these trade bubbles here that it's showing that the quantity actually traded. So a lot of traders will tell me, hey, I know this is a real order because look, it's been in the market for so long. And then when we actually came here, it actually filled, right? Well, what some of the manipulators do is they use a large order to hold the market down. So let's say that they have 300 contracts here sitting on the offer, and they want to hold it down. So what they're doing here is they're accumulating over time. They're accumulating, let's say 1,000 contracts, and they have 300 here to hold it down. Well, what they do is to make it not spoofing is they just allow this order to fill now. So once they've accumulated all their size here, they're long 1,000 contracts, it moves up into here. They now remove 300. So now they're long 700 contracts. It looks like they actually want to sell here, but the market just slams right through it because that's not their intention. So just because you see an area of large liquidity doesn't mean that that's the actual area where they want to sell, right? We need to do much more than that. We want to look at where the prices are being accumulated. If you can look at where the trades are being transacted at, are we hitting more into the bid down here and unable to push lower? Then we see offers start lifting. That's an indication of absorption, which is something I'll leave for another presentation. But this is just a couple of slides to get you seeing what spoofing looks like and how there's many different ways that this can be expressed. So it's not only the stuff that I showed you back here, they can do it in many, many different ways. So they can try to ride it up. They can let some of the orders fill. But if you have a firm grasp on what's going on and you can see that, hey, they're pulling orders, they have no intention to fill here, then let's start looking to the sell side. Let's start seeing where the traders are filling in on the offer. So that pretty much does it for my spoofing and manipulation. One thing I wanted to share with you guys is I have available is the Optic Trade Room. So with the Optic Trade Room, my intention here is to be able to show you guys these things live. So as they happen, it's one thing to show you on slides, this is happening, but it's another thing to call it out live and really help you guys stay on the right side of the market. So the intention of this trade room is to call out things like market structure, price action, and manipulation as it unfolds live. So I want to help you guys stay on the right side of the market, calling out who's in control, not only buyers and sellers, but when are the institutions manipulating? Is it day traders in control? Which participants are in control so you can adjust your strategy accordingly and tackle it that way. Now, what I'm offering is a 7-day free trial. So I'm going to show you guys how to get access to that in a second. What you can do is you can head over to this link, which is going to take you to optictrading.com. It's going to, under products, Optic Trade Room 7-day free trial. It's going to pop up to this page and you scroll down, click on enroll now. And it's going to show you the payment page. So I'll show you $0, zero for the first 7 days, then $249 per month after that. If this is your first time, you've never purchased anything with us before, you're going to have to register. So you simply click register now, type in your information, click register and check out. And then that's going to take you to your dashboard where you can log in. So once you log in, you're going to see your dashboard. This is all the products and services that we offer with Optic Trading. You're going to click on Optic Trade Room. If you're not subscribed, it's going to say subscribe with a yellow button. If you are subscribed, it's going to say check, and it'll give you the option to purchase within this dashboard as well. Click on Optic Trade Room. It's going to take you to this screen. This says video is unavailable right now because we're outside of market hours. But if you are within market hours, it's going to have a video that you can just click play to start the video. If you've joined the room too early, because we opened the room 15 minutes before crude oil opens at 8:45 Eastern Standard Time. Usually I'm opening it actually at 8:30, but if you've come before that and you've left it on your screen, you're going to have to just refresh your screen when the trade room opens. If you've come at the time, then it'll already be open. But that is pretty much it for my presentation. So lastly, I just want to say a huge thank you to everyone for attending the webinar. Again, thank you to NinjaTrader, and I'll be more than happy to answer any questions that you guys have. Okay, so I'm seeing some questions here. I might have missed it. Do you only trade crude oil? Yes, I only trade crude oil. Do you trade other futures instruments? I specifically only trade crude oil. I think that focusing in on one instrument and becoming a master of that instrument is very important. It's better to be a master at one thing than okay at several. So I'm only going to show what I do and what I trade. So in the trade room, I only show crude oil. I don't trade anything else. Is stop loss chasing one of the ways of manipulation? Yes, there is something called stop hunting. So with it, institutions, they usually know where people are putting their stops, right? Because you're using it at logical areas, right? You want to use market structure and price action. And usually it's behind support or resistance. It's behind key swing highs and lows. So it's not hard for an institution to guess where a stop loss is. And yes, they do stop hunt. And there's ways to see that within the order book as well in the order flow. Maybe something I can save for another presentation. Let's see what we got here. Is there any course available? Yes, I do have 2 courses available. I can pull those up right now and show it quickly. So I have the Foundations of Trading, which is an introductory trading course. And this is for anybody who's brand new to the markets. It's just really, really basic stuff, but it's giving you a foundation to start on, as well as I have the Optic Professional Trading course. So this is our flagship product. This is the course that's going to take you from A to Z as a trader. And that is the course that we offer. Let's see here. What indicators do you use? Okay, so I don't use any traditional indicators. I don't use the SMA, EMA, RSI, any stuff like that, just because I believe that all those things are lagging, right? They're lagging indicators. I do use things like the market depth map, and I do use volume and certain other things like that, but I don't use any traditional indicators that you'd mostly see. Do you use Bookmap? No, I do not use Bookmap. I use strictly only NinjaTrader. So I use their depth map that they have in NinjaTrader. And one of the things I really love about it is that you can change the time, right? Because sometimes algorithms are moving so quickly that if you have tick by tick, it's hard. One thing I love about NinjaTrader is I can put it on a second and then it slows it down so I can see it much, much easier. Let's see. Are you familiar with Jigsaw, one of Ninja Spawn? I'm not really I'm familiar with the company. I haven't used any of their products, so I can't really comment on them. The professional price is really high. Is there any discounts? Yes, there is. If you enroll in the masterclass, which is a free class I have, then there's 2,000 off. Then you get 2,000 off for 3 days. So it's a 72-hour sale from the time you enroll in that. So you could take advantage of that. For spoofing indicator, what software do you have? Okay, so to detect spoofing, I'm looking at the depth map within NinjaTrader. So let me bring it up here. Yeah, I'm just looking at this depth map, and this is helping me find spoofing. I see the large orders come in, and then that's how I'm identifying it. Thank you, Adam. Oh, you're very welcome, Rob. Is there more in-depth info into the DOM and spoofing? I'm still a 2-year amateur struggling. More in-depth examples. Okay, so spoofing and these manipulation practices, this is extremely high level information. So this is not stuff that you're really going to find readily available. I've heard some other people talk about spoofing and manipulation practices, but it's something that's illegal, right? So it's not really talked about too often. So it's very hard to find information on this stuff. Do you use the footprint chart? Yes, I do. That's what I call the tape. So I don't just look strictly at this chart. I also look at the tape. I want to see what's being traded at. Is it on the bid or the offer? Are we holding bids? Are we holding the offer? All that kind of stuff. So I look at the tape as well as the depth. I combine them both. I think if you only use the depth, if you're only using this chart, you're only looking at 50% of the market. If you only use the footprint, only look at the tape, you're missing out on 50%. If you put them both together, then you're seeing both, all the market essentially. What is the link for the 7-day trial? I will put that link in to the chat. Let's see here. Yeah, so I'll leave that link in the chat in the end here so I can get through a lot of these questions here. Will work with futures such as ES. Yes. So basically, this works with all markets with sufficient liquidity, right? So this happens in stocks, it happens in bonds, it happens with the ES. This kind of stuff happens with all markets. It's not just crude oil. Crude oil is just the market that I specialize in and that I trade. And that's why I give all my examples on crude oil. So do I ever look at time and sales versus the DOM? So time and sales is actually the footprint, right? So time and sales is much harder because it's just showing everything in a straight line where you're just having all these numbers. The footprint is showing us which ones are hitting to the bid and the offer. So it's much, much easier to really understand the information that way. So I'd suggest if you look at time and sales and you haven't looked at the footprint, maybe take a look at the footprint. What is the tape? So the tape is all the orders coming in. It's the buying and selling. Let's see here. What time frame do you use? If you're asking what time frame am I trading on or what time frame am I using for my depth chart, for the depth, I'm looking at 1 second. I don't look at it tick by tick, even though you might miss some information, simply because I'm not just looking at this. I'm also looking at the tape. I'm looking at the footprint. I'm using so much other stuff as well that I don't really want it so fast. So for my time frame, I use a 1 second chart. Cumulative delta, yes, I use cumulative delta indicator as well. It's very important for my trading because I can see who's kind of winning. I can also see absorption, right? If price is moving lower and the delta is not, then that can be an indication of absorption, right? Or vice versa. So delta, really, really important. I use that as well. So what do the optic zones indicator look like? So the optic zones indicator, let's see here if I can just open up my screen here. So basically I have a chart, let's say right here that I'll put. Can everybody see this chart on the screen?
I can see it.
You can see it? Okay. Yeah. So basically I have all these levels here that I'm using to trade, right? And that's what the optic zones are. They're supported resistance zones that I'm finding. I find that some traders have a hard time because it's very nuanced when you're trying to find these levels. So I provide a service where you can just subscribe and these will actually be, I give you the workspace so you can just add it into your NinjaTrader and trade it that way. Let's see what else we have here. CL market has been kind of dead lately past few years. Do you still trade it? So crude oil has not been dead. We've actually had an 11-point range. Today we moved $5.06. Huge ranges here, right? We're having a lot of liquidity. I know it's happening because we have some news here, but I don't really consider it dead. Even before that, we were having $2, $3 ranges. So no, I wouldn't say that crude oil is dead right now. In your optic trade room, do you trade real money or sim? So what the optic trade room is, it's not a trade calling service where I'm telling you guys when to get in or when to get out. I'm not trading in this room or showing my actual executions. What I'm doing in this room is keeping you guys on the right side of the market by calling out things like market structure, price action, as well as when I see spoofing, when I see other manipulation tactics, I'm calling them out so you guys can get a better understanding of what's going on. I'm helping you guys understand who's in control, as well as when we switch to day traders being in control, I'm showing you guys as well. So there's not really any trade calling going out where people simply just copy everything I do. This is for education. It's to help traders develop. Can you use it for scalping? Yes, you absolutely can use this for scalping. It's just that you're gonna have to be much more quicker with attacking the markets. But the principles that you're going to use, like in any of the courses that I teach, the foundational principles, they're applying to all markets in general. And then the course itself, execution section, is highly geared towards day trading. So everything in there is geared towards day trading, but you can use a lot of the principles for scalping as well. What are the hours you operate the trade room? So we operate the trade room from the RTH session, the full session. So we're not just trading the open, we're trading the open straight into the close. So that is from 8:45 Eastern Standard Time. It opens at 7 right until the close of the RTH session. Oh, sorry, dead means less volatile than it used to be. Yeah, so it goes through cycles, right? Like markets are cyclical in nature. Same with volatility, right? Volatility comes and goes, it expands and contracts. Back in '09, yes, the volatility was huge. It's a little smaller, but right now we're experiencing some good volatility in crude. Can the recording link be sent to me? There is going to be a recording up on the ecosystem website, so you can access it there. If you're into a 1 second chart, mostly likely you scalp small ticks in and out. No, that's incorrect, actually. The reason why I'm looking at this, I don't make any trades off this chart. So no trades are happening off this. I'm just using it to spot manipulation. I want to know where the manipulators are. I want to know that, hey, they're pulling their orders. They're trying to build a sell position in here. Then I go to the tape. And once I pull up the tape, I'm finding how I'm going to execute this, right? So I'm pairing them together, and I'm actually an intraday swing trader. So that's what I classify myself as. I'm looking to catch the swings in the day. I'm not scalping in and out. I'm not holding positions for 1 or 2 minutes. It's a longer intraday trend is what I'm trying to catch. Doesn't crude move extremely fast due to lack of liquidity? Yes, that can be true at times. Any market's going to move very fast when it gets thin, but it can thicken up as well. So let's see here. Yeah, I'm not going to pull that up right now, but yeah, so if we get into areas where, like, if you look at overnight certain times or even certain times in the day where you see the bid and the offer and there's like very less on it and it just takes a little bit to move it, that's going to make the market move around very, very quickly. When it thickens up, it will move slower. Right now, we're having a lot of volume, but liquidity is looking very thin because it's jumping around so fast. So it's appearing that way. But there is sufficient volume, and you got to just wait for your points, right? You got to pick your spots, especially when the markets get really volatile. People are tempted to jump in and out. They want to be on board because they see the market moving. That's not always the best case. You want to look at your strategy and make sure that you're picking your points where you can really have something to hang your hat on. I agree. This is the way not to trade, using indicators, but following the professional traders and their intent with insights via volume. This is my aha. I had recently in my trading. This to me is spot on. Wow, it's really good to hear, Wayne. I'm glad that you can pick that out. This is one thing that separates the retail traders from the pros, right? It's moving away from all the crazy indicators and the flash and things, and it's learning what actually moves price. So that's good that you can start moving in that direction. Depth can show all the manipulations possible. So in the market depth, you're never going to be able to spot all of the manipulations, right? And the reason for that is because there's also execution algorithms that are being used where, let's say this trader wants to buy and they want to get, or they want to sell up here, right? Well, instead of putting their whole quantity, they put an execution algorithm that's going to slice their order up into maybe 2, 4, 2, 1, 1, 6, like random quantities. And that can be very hard to see what they're doing. We can also go to the tape and see where the trades are executing, but you're never going to be able to spot every single manipulation tactic being used. But the aim is to be able to spot as much as you can and stay on the right side. Okay, so that's pretty much it. I'm not really seeing any more questions here. I hope I answered everybody's question. A lot of people saying thank you. You're welcome to everybody. Really happy to be here and assist any way I could. Who teaches the course? It's me. So I've built the whole course myself from the ground up. I don't think it would be good to let anybody else build it because I'm the professional trader behind it. So it's going to be me throughout the entire course from beginning to end. I built it. Yeah. You're very welcome, guys. Are you familiar with target trading? No, I am not familiar with target trading. Is manipulation something that happens because of electronics? Was there this in the manual days? So yes, manipulation actually happened back in the old days. So I am pretty obsessed with trading. So I would read everything I could get my hands on. I actually found these old manuscripts from the 1800s where when manipulation actually it wasn't illegal back then, and some traders were discussing how they would do it, and similar practices they were discussing happen today, but today is just on a whole nother level because now that we have electronic trading, we have algorithms fighting each other. So it was always happening even back in the old days, even in the late 1800s to early 1900s when there was no electronic trading. This stuff was still happening, but now it's a whole other animal because you have algorithms trying to eat other algorithms lunch. You have, microsecond trading. It's insane what we have now. So it's still been there, but now it's just on another level. A lot of thank yous coming in. You're very welcome, everybody. What do you suggest we read? Okay, so one of the first books that I read that kind of tipped me off to market manipulation was Reminiscence of a Stock Operator. That's probably one of the most suggested books to read. There's a couple of hedge funds. I think even at Paul Tudor Jones's hedge funds, it's a required reading for every new trader that comes in. And the main character in that story, the main trader, he actually talks about manipulation. It's very subtle. It actually took me maybe 3 or 4 times reading the book because at the beginning I didn't really know much, but I've read that book maybe at least 10 times. Like I've just loved the book, but every time I get something new from it. But one time he was talking about how traders will run the price up and then they'll push it back so it looks like it's selling, and they'll run it back to the high, and that forms kind of like a market top or an M top. And that got me going on thinking about different things. And then I just went down the whole rabbit hole of manipulation and learning a lot of different things. Okay, everybody. So we're pretty much running out of time. So I'm going to have to cut the questions off there. If you guys have any more questions, you can reach out to me at Optic Trading. .com. You can go to the website and contact support there, and I'll get the questions, and I'll be willing to answer any questions you guys have. I won't stop until I've answered them all. I really want to help you guys out. It's been a lot of fun here. I'm really excited that I got this chance to share with you guys, and hopefully we see you guys. I get to talk to you guys very soon.
Awesome. Thank you again, Adam, for taking the time to share with us today. Everyone in attendance will receive an on-demand recording of today's event, so just keep an eye open for that email over the next couple business days. We hope you'll join us in future webinars. We would like to remind you that the information provided this was of Optic Trader and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. I enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader ecosystem. And again, thank you so much, Adam.
No problem. Glad to be here. Bye, everybody.